The Fed's two-day meeting kicking off today with a rate cut expected. Joining us right now, former Kansas City Fed President Esther George. Esther, it's great to see you. You've probably been hopefully listening to so much of the conversation, reading so many of the various articles opining on what Jay Powell should do. And it appears that there's this fear now that maybe inflation has not been dealt with and that maybe cutting rates right now is not the right move. What's your thought?
Yeah, well, good morning. I do think this is a time to be very cautious as you read the data. The committee, I think, has taken confidence in the fact that inflation has come down significantly. But of course, they're very clear about what their target is. And as we're watching inflation data come in, we're seeing that it's not continuing to decelerate in the same manner that it had earlier. So that, I think, is a reason to be cautious and to really think about how much of this easing of policy is required to keep the economy on track.
So if you were in the meeting, you would say no cut?
I think I'd be inclined to say no cut. Let's wait and see how the data comes in. Again, you know, Andrew, 25 basis points usually doesn't make or break where we are. But I do think it is a time to signal to markets and to the public that they have not taken their eye off the ball of inflation.
So I think, all of the sort of signaling that's gone on even in the last couple of weeks has been around this idea that there would be a cut and maybe then there would be a pause, maybe even a lengthy pause. Does that strategy still make sense to you? Or I mean, if that were the case, if we woke up in the morning tomorrow afternoon and we heard, OK, they're cutting 25 basis points, but they then through language say, you know what, we think we're going to be paused for a long time after that because we know we haven't fully dealt with inflation. We're going to watch that. And we're also going to watch, what the new incoming administration does. Would that temper things?
Well, I think that will be very important, of course. So I do expect that we will get a 25 basis point cut based on the communications we've heard so far. But remember, at this meeting is an important communication coming out, which are the dot plots, the summary of economic projections, which will give us clues about how the committee at large is thinking about the path ahead. So I do expect that we will see in there some adjustments in their inflation path. I think we'll see some adjustments in the Fed funds rate path to show that it will be a slower, more gradual downward move over the next year or so. And, whether that is a pause, a skip, an extended period of leaving rates where they are, we'll watch for the communication coming out of the press conference tomorrow to get a better sense of that.
Esther, as they're putting that dot plot together, and this goes to the question of, how do you predict what's going to happen under this new administration, how you think about tariffs, how you think about tax policy, how you think about all of these things that are going to converge in the year 2025 that may actually have a genuine economic impact, how the Fed should or shouldn't think about that as it tries to project forward?
Yeah, so I think the way I look at this right now, Andrew, is you have inflation running well above that 2% target, and it's shown to be sticky right now. Regardless of how precise one could be about potential policies coming forward in 2025, I think all of them so far suggest a caution light around this, whether it's tariffs, whether it's taxes, whether it's a fiscal policy and deficits in general. The reading I get is if you're a risk manager at this point, if you're thinking about what lies ahead and you've yet to achieve your 2% target, you will move carefully to make sure that you're not ceding the credibility that you want in terms of low and stable inflation. So I think it's a time to just be careful.